Well, thanks so much, everyone, for joining us today. I think 55 people was, a really impressive number of people joining us today. As I say, this is our first ever Money Gym Money Masterclass. So what we're going to be doing is we're going to be running a series of these webinars each month, covering different aspects of helping you to make the most of your money. London Mutual, that's what we're all about. And this week's session, give me a second. In today's session, we'll be looking at how to achieve your financial goals in 2022. We'll have a bit of a discussion first for about 15 minutes with myself and my colleagues, who I'll introduce in a second. Then we'll open up the floor to your comments and questions. As I say, and I'll say it one last time, this is our first time doing this, so please do be kind. If you do have any comments or questions as we go along, feel free to drop them into the chat box at the bottom of the screen. So yeah, as we go along into the chat box, feel free to say hello, ask us whatever we're talking about, or as I say, at the end, there'll be an opportunity for some questions. So without further ado, I'm Ben West, and I'm responsible for our promotional and outreach work at London Mutual. And I'm joined today by two of my colleagues, is Anthony, who heads up our credit control team. He's passionate about finding solutions to debt and helping our members when times are tricky. Leanne is our business analyst, and she perhaps more than anybody else knows about London Mutual's products and services and ways that we can help, and she does a lot of the work around that. So we'll get on to the topic of today's session now. Financial goals. So what are we usually talking about when we talk about financial goals, Leanne and Anthony?
So if we were talking about short-term and long-term saving goals, a short-term savings goal will be something like if you wanted to save for a holiday, which was coming up in the next year or so, or it could be something like your car insurance is due to renew and it's not going to renew until like October, so you'd start planning for that now. And a longer term savings goal will be something like you want to save enough money for a deposit on a home or something like that. But throughout the webinar, we will refer to short-term and long-term savings goals. But that's what we mean by those.
And I think it's, that kind of distinction between the short term and the long term is quite important. Obviously kind of Rome wasn't built in a day. So the idea that you can kind of, go from perhaps where you are right now and want to own a home within a year or two or a really kind of short period of time. I think that the key thing with those long-term goals is that they're the ones that are obviously going to take a little bit more planning and a little bit working up towards. And I think it's important to be kind of fair on yourself and not kind of get those kind of short-term goals, which might be more attainable within the next 6 to 18 months, confused with the longer term ones where it's going to take a little bit more kind of planning and pulling things together. And we'll talk about kind of how to tell the difference between those two things, how to make goals that you can stick to, and so on. I think the kind of the key message today is probably around kind of making your money work for you. I don't know, Anthony, whether kind of you obviously in your role come across lots of situations where probably money's quite a scary or stressful topic. So anything kind of around the general topic of financial goals before we get started?
Yeah, no, definitely. I think one of the financial, creating financial goals, whether they're small, large, long term, it's the subject of having that conversation of talking about your money and talking about your actual goals in general. It's quite taboo and it's quite scary. Me, as I said, my team, we deal with a lot of the members here at the credit union, and that subject becomes very stressful. And hopefully this is a way to make it easier for everybody to talk about their financial goals. And even myself, I don't like speaking about it. I'm not going to, it's just one of them things. It's you always have that thing in the back of your mind, well, I don't really want to talk about finances. And yeah, so hopefully this is, this might not make it as scary to open that conversation or start the conversation.
Yeah. And I think, it's we often find ourselves in a place where it feels a little bit like we work for the money, we work to pay the rent, we work to pay the bills, and we're having to run to kind of keep up with our money. And this is about kind of switching that relationship around so that actually you feel in charge and about how you can make that money work for you. And I think, as Anthony says, that's about kind of having that conversation with yourself, and in some cases with others as well. So I think the next thing obviously is, what's the point of financial goals themselves? The obvious question to ask is, we've been through COVID, been through the pandemic and other events over the past few years, so we know, I think you know, it's pretty obvious that things can be quite unpredictable. You know, we see all these sort of, you know, go on a crash diet or start a New Year's resolution, which all end up getting forgotten about. And so given how kind of unpredictable things are at the moment with COVID and the cost of living, is there actually any point, guys, in having financial goals? You know, isn't there an argument for just kind of taking things day by day when it comes to money?
No, I think the pandemic is a good reason. It's a good example of why we should have financial goals, because if you look back at the pandemic, a lot of people were put on furlough, and if they were furloughed by their employer, they'd only get a certain amount of their income. They'd have to rework all of their monthly outgoings and everything, and they'll be restricted on normal things that they might do. So if they had like some additional savings, it would be like a safety barrier for them. It's more like a security thing.
Anything to add on that, Anthony?
Yeah, definitely. I think now more than ever, I think made sort of from what I see and speaking to members on a daily basis, I think the last 2 years have been very scary for everybody. And I think the uncertainty of not knowing that actually in 2 months' time, the £500 or the 20 quid that you've got sitting in your account, is that going to make you last? And is it going to, if I get furloughed in a month's time, or I'm not going to get the hours, or my rent's going to go up, can I plan and can I still live? I think, you know, setting a financial goal, and as I said, I think that the biggest stress is financial goals are not meant to be scary. They're not meant to be daunting and go, I've got to put away £100 every month, even though I only earn £8. It's, you know, having that freedom of going, I can set it and I'll be flexible with it, and I can be honest with myself about what I'm going to do.
So it's, you know, there's probably a lot in there in terms of just kind of knowing what direction you're going. A little bit like, you know, a little bit like driving. You know, you unless you've got some idea of where you're driving to, you're just going to find yourself going around in circles. And you know, it may take you longer to get there, or shorter to get there. You might find yourself you know, stuck in traffic, or even your car breaks down. But you know, the key thing is that throughout all of that, you've got a kind of clear idea of where you're headed. And I think, you know, the message there around kind of financial goals is that it's worth having a similar sort of idea around your money, having a clear idea of where you're headed to. That being said, you know, obviously we're all in kind of a range of different situations and circumstances, and so, you know, I think the other thing that I would bring up is that, you know, you're not going to necessarily get from where you are right now to that kind of that dream of retiring at 50, or you know, of having the kind of the second home somewhere sunny or whatever. Those sort of dreams, you're not. It's, you know, if you try and get from where you are right now to those dreams in one go, you're basically setting yourself up for failure and disappointment. So I think, you know, the other thing to be saying around financial goals is that it's worth building up gradually. And I think, you know, this pyramid in front of us here is kind of a useful way of thinking about that. Leanne, anything to sort of to add on that one?
No, I think this is the best way to look at it, because if you was paying, so you've got at the bottom of your pyramid, you've got paying off existing debts. If you were paying out towards a credit card or a loan or something like that, and you're paying like £100 a month towards that, if you cleared that debt, you're already in the habit of paying out that £100 or what it is towards the debt. So if you then take that funds and put it into like a savings pot instead, you won't be financially straining yourself with the repayments, and it takes you closer to your goals without having to look for any additional financing or anything like that. But if you did like need to take out a loan, with the credit union, a lot of our loans, we recommend that the members save along with their loan repayments. So say, for example, a loan repayment was £80 a month. If they save like an additional £20 on top, by the time they've finished repaying the loan over like a year, they already have like a head start on their savings. They'll have £240, which they could use towards something else. And it kind of gets people out of the cycle of taking a loan, repaying it, taking another one, and just tumbling into debt. So
it's about kind of, you know, always having the kind of a clear idea of where you're headed to, where you want to get to with your finances, but kind of building up step by step. Just on the debt question, Anthony, obviously this is very much kind of your area, and how does that fit with kind of with debt and building savings pots and then building up to that kind of to achieving your financial goals?
Yeah, no, definitely. And sort of touching base on what Leanne said, it goes back to making your money work for you, and sort of looking at this pyramid gives you that opportunity that, you know, if you can sit down and go, right, I'm gonna attempt to pay off all my debt first, and I'm gonna start saving. You know, to be honest, looking at that, I could be, well, I'm on benefit. I don't know if I can save, let alone pay off all my debts off in one hit. But you can attempt it. You can, little and often, as I always say, that, you know, if you can start saving £5 a week, £5 a month, that all adds up and puts your mindset and puts the way that you're thinking about your money first, and then your money does work for you. You know, you're not waiting at the end of every month going, oh, I can't afford this and I can't afford that. Well, actually, I've been saving for the last 6 months. I've got a safety net there behind me.
So yeah, I think that's an important one. So I think, you know, the kind of priority number one for most people ought to be to get that immediate pressure off of you in terms of kind of, you know, having kind of existing debts hanging over you. So priority number one, get those sorted. While you're doing that, or after you've done that, and we'll talk a little bit about how that works, kind of next step is then to sort of, once you've kind of got those existing debts from hanging over you, start to try and build a savings pot, so that gives you your sort of your financial independence and the confidence to know that whatever happens, you're going to be able to manage because you've got some savings. And then kind of once you've got that, you've got a really kind of solid foundation for going and kind of achieving those goals, whether it be buying a new car or your holiday or the longer term stuff that we've talked about. So kind of probably the first step towards that, and we're going to talk a little bit now about kind of making a budget. Obviously, Anthony, this is one of the things that you often encourage people to do, particularly if they're struggling. Is this kind of exercise of making a budget, is that worth doing even if finances aren't necessarily tight at the moment?
Yeah, definitely. I do mine every month. I update mine every month. It's, for me, it gives a clear indication of where my money's going and what I'm working towards. If I've got a long-term goal or a short-term goal, it gives me a clear indication of actually what I'm paying out and what I'm paying in, and where I'm overspending, and, you know, things on nice things that you say nice to have and subscriptions. Sometimes you don't realize they all add up. Oh, it's only £5 this month, £5 that month. Next minute, you know, you're 50 quid later and you've got 50 quid worth of subscriptions going out of your account. And so, yeah, so from that point of view, it doesn't matter whether you're in financial hardship or not, having a budget planner for your money is a key thing to have going forward. And in regards to anybody that is having financial difficulty, this is something that we give out to all of our members. We give all of our members an opportunity to fill this in with us or at home. And it really does. It gives that a clear indication that actually you can reach out to a creditor and say, well, actually, I've only got £35 left at the end of the month. I can't afford to pay you an extra £20 as I agreed, but I can afford to pay you an extra £5. Yeah. It doesn't have to be massive. It doesn't have to be, you know, doing this is not meant to affect anybody overnight to go, oh, I've got my money all in check and ready to go. This is a long-term movement for yourself.
And I think you make a really good point there, Anthony, in that, you know, just because you've got a budget doesn't mean that you're always going to stick to it, because, you know, obviously you should aim to, but you know, I think often we think about kind of making a budget as something which you do if you're really on top of your money, you're really kind of savvy in things. But at the end of the day, making a budget is just about having a list of what's coming in and what's going out, and having the confidence of knowing where you are. And you know, and things do happen, and sometimes, you know, as you say, you know, you find yourself overspending on some things or whatever. The whole point of having a budget is that you can see that happening and you can deal with it before it gets you into problems. And so, you know, it's whether you think of your finances right now as perfect or not perfect, one of the ways to kind of to see and to kind of get that reality check is by doing that budget. Leanne, anything to sort of add or tips on how to go about kind of putting that together?
Well, no, we have a tool on our website, but you can also draw it up in a spreadsheet or something like that. But based on what you're saying about where you're saying that monthly subscriptions and that kind of thing, I know through the pandemic, I probably, if I looked back at my budget, and I probably overspent on takeaways and that kind of thing through apps that you can just order like deliveries online. But you see, like the money that you was paying towards that, like an extra like £5 or £10 on that, you could actually have saved it and you wouldn't have missed it. So I think, yeah, I think the budgeting tools are quite good to work out where you're overspending and you don't really need to as well.
Yeah, definitely. And I think as Leanne says, you know, if you're not one for spreadsheets or even for pen and paper, we've got a tool online, creditunion.co.uk/budgeting, where it's a sort of handy online tool. It's independent, so we don't get any of the kind of the information. All the information you put in there is confidential. But there's a handy tool there that will take you through the process of creating that budget. And the web address there is up there, but we'll also send it around to everybody who came to today's session. So Leanne, I know you're a big fan of encouraging our members to save, and you know, a good part of your day is spent developing new products and ways of making that easier for people. What are your tips on building up that savings pot?
I think it's good to actually have multiple savings pots. I would separate short-term savings goals from like longer-term savings goals, because everything, if you look at it as a glass and you're pouring into one cup and then you pour into another glass as well, if you're taking out from one, you don't know how much. I don't know if I've described that quite well. Say if I go back to like my holiday, if I'm taking out my long-term savings for my holiday goal, then I'm pushing myself further away from that long-term goal. So it's best to have like a clear outline of where all my money is going and which pots I need to save more into, and like to manage it that way.
So one pot for each thing you want to do.
Yeah, one pot per goal.
Okay.
And then yeah, and if you take money out and put it into your savings as soon as you're paid, or as soon as you get any sort of income, even if I was receiving benefits, if I took £5 out of that a week from my benefits and put it into a savings pot, you won't actually miss it, because it would just be like, you just look at it as though you've only received this amount of money, rather than trying to save later on in the month where you've already started to dip into, like, you already don't believe you have enough money to get through.
So sort of doing your savings at the start of the month as soon as you get the money, rather than at the end.
Yeah.
Okay. That makes a lot of sense. Anything? Sorry, Anthony, you were going to come in there.
Yeah, I was just going to say, just on the back of what Leanne said there, you know, having a savings pot for individual things does help. And I don't want it to come across that we're saying, you know, you get your money straight away at the beginning of the month and you've got to put 2/3 of it away or 1/3 of it away for saving. You know, sometimes that's not realistic, and in this day and age it isn't realistic to go, oh, I'm going to put £300 away for what my whole income of the month. You know, you could start little with £5 a week, £5 fortnightly, and review it at the end of every month and go, actually, I can't do that. I can do £2.50, or actually I can do a tenner. I can take that up to £10. I can, you know, having saving pots for individual things that you want to achieve is key, because you can be flexible with them yourself. It's not about having a pot and locking it so you can't touch money out of that. It's about, you know, designing what works for you and making your money work for you with the savings that you can afford.
It's sort of, it's linking the money that you've got to whatever your goals are, rather than sort of necessarily kind of making it up as you go along, I guess. So I'm aware we're sort of slightly overrunning on time, but I think that's fine, because I think we're having a good conversation here. But Anthony, over to your area, which is obviously around the kind of the debt side. For most people, obviously, you know, borrowing is a normal part of their lives, for good and for bad. But it can be easy to take on more than you can comfortably handle. So I think, you know, next month's session, we're going to be looking at this in a little bit more detail. But just very briefly, what is the best place to start in tackling our debts?
The information and advice that I'd give, especially with our members of the credit union, the first thing is have a look at your money. You know, we've already touched base on it, and I don't want to be a broken record and go over. Is looking at your money, looking at what you're doing with your money. Then the first thing I would always indicate, if you can't make a payment, or you know you can't make a payment, or you've fallen behind, life gets in the way, stuff happens. It's a normal thing. Reach out to your creditor. Reach out straight away. That taboo subject of having that conversation of I can't pay. They can. There's 101 things they can do for you, and the sooner that you do it, the easier it will become for yourself in the long term. You know, it's I can't pay this month's council tax, or I can't pay this month's gas bill. Let them know. Don't wait until it's due. Let them know right at the beginning of the month. My money is short. I can't pay this. What can you do for me? What help can you give me? And 9 times out of 10, they can, and they will. No creditor wants you to be in debt to them. You know, we would love for every member at the credit union to pay on time. Realistically, it doesn't happen. Things happen. Life gets in the way. It is, you know, there's stuff there that's going to be unavoidable. I would try and keep into a regular pattern if you are falling behind in debt. Little and often, I always say, doesn't have to. I'm not asking anybody to do miracles. Little and often, token payment, making regular, affordable payments that match your income is key. And then I think the last one that a lot of people do sort of, there's a bit of a, you know, a consolidation loan. They go, oh no, I'm not taking out a loan for consolidation or anything like that. As the years have gone on, you've seen more people at the early start and this early stage of debt go into a consolidation loan because it's easier than doing it 6 months in than it is 18 months in. You're more likely to be approved for a consolidation loan with 4 creditors that you owe £500 to than 4 creditors that you owe £2,000 to.
And Anthony, just very briefly, what's the consolidation loan?
A consolidation loan is that you, say for instance with us, you would apply for a loan for us, a consolidation loan. You'd have a number of creditors that you owe money to, could be a catalogue, phone bill, gas bill, credit card. We would then add everything up, work out an affordable payment for yourself monthly. You would pay that to us. We would obviously, first of all, say everything adds up to £4,000. We would loan you the money of £4,000. We would pay off all your creditors. Then obviously you only owe one person the £4,000, and we will take that monthly from yourself, an affordable option, and 9 times out of 10 at a lower interest rate than you would normally get from a payday loan company or a consolidation company online. Normally the credit union rates are a little bit lower, or you know, more on borderline.
I think as well, if you're paying multiple creditors, you could be paying £50 here, £100 there, another £50 there, and it will come up to like 200 or even sometimes £300 a month or something, depending on how much you're paying to each. But if you take all of that debt into one and consolidate it over a longer period of time, you end up paying a more manageable amount back per month. So say, for example, that £300 that you was paying monthly, you may reduce it to like £150. You probably wouldn't need to go into any further debt and take out anything extra on top of that. And it just makes it easier to save as well.
So it's about helping, you know, it can be a tool, and it doesn't, it's sort of not necessarily the answer in all cases, but it can be a tool for sort of helping just to sort of get on top of things and making your finances and all of the different money that you owe to different places, just tidying that up a little bit. So there's an option there as well. So obviously I want to make sure that we've got enough time to sort of answer a few people's questions. So just the thing I wanted to finish on was really just kind of talking about the kind of the setter, the goals themselves, and kind of how to set goals which realistically you know, you're gonna be sticking to. And so often we kind of, and you may have probably heard this kind of this phrase before, but all about kind of setting smart goals. And so by smart goals we mean sort of specific, measurable, achievable, realistic, and time bound. And I think, you know, really when you're sort of thinking about what are my goals for my money in 2022, I think those are the things that you want to be making sure that your goals are. So by specific we mean you know, having a vague idea that you'd like to buy a car, or you'd like to buy a house, or you'd like to move to a different place, or whatever your plans are, the more specific you can be about that early on, the better. So having a really clear idea of, okay, so what sort of car would I like to buy, or where am I looking to buy a house, how much is it going to cost me? The more you can have a kind of clear picture in your head about what that is, the easier it is going to be to motivate yourself and to keep yourself focused on that by painting a picture in your head. Measurable, I think we've touched on this a little bit, but ideally having a separate savings account for that, so that you can see the money start to add up towards that goal, and keeping the money that you're putting aside for that goal separate from everything else is a really useful way of doing it, because actually you can then measure your progress towards the goal. I think the third one, and I think we've sort of hinted at this throughout this afternoon session, but it's actually really important that it's achievable. There's no point in there's no point in wishful thinking. You should only be saving as much as you can afford, to be honest. If you've got, anyone can move a few £100s if they've got it into a savings thing. But if you're going to need that later on in the month, then that's not going to be sustainable. So actually that's where saving a small amount of money and doing it regularly is going to be much better than trying to put aside more than is realistic or achievable for you. So again, don't set yourself up to fail by being too ambitious. Start small and build from there. I think realistic as well. That's where the can I afford to save this amount each month? Maybe it's better to start small and to build up from there. And then if you want to be able to save more, what might have to change about my lifestyle in order to afford it? Do I need to cancel that subscription, or cancel the TV, or change to a cheaper mobile plan, or whatever it is? Be sure that it's realistic for you to be able to do it. And then I think the final one is almost the most important, which is having a clear idea of, based on how much I can afford to put aside each month, how long is it going to take me to get there? Because actually, if you've got a clear idea of how long it's going to take, that's going to make it easier for you to measure the progress towards it. So that may be a useful way of thinking about it, may not be a useful way, but that's certainly one way of thinking about goals and setting goals that you're actually gonna meet. So again, I'm sorry, and I'm aware that we've got a little bit over time today, but we have got some time to answer your questions. So if there are any questions in the chat box, feel free to post them, and me, Leanne, and Anthony will do our best to answer them right now. Equally, if you need to head off, or we don't have time to cover your question today, you can email us anytime at feedback@creditunion.co.uk. Only other thing to bear in mind there is that unfortunately we can't give individual financial advice. So we can give you sort of general tips around what is good in general, but we can't sort of give individual stuff we can't tell you exactly what you should do. And so if you're unsure about whether a particular financial product or a particular way of handling your finances is right for you personally, then it's important that you get independent advice, because that's not something which we're allowed or are going to be equipped to help you out with. So please go ahead and type your questions into the chat box. Any that we see we'll answer over the next sort of 5 or 10 minutes now. But otherwise, thank you very much for joining us today. As I say, we'll work on our timings for next month, but for next month's Money Gym Masterclass, we'll be focusing specifically on borrowing, looking at APR. What is it? How do you know whether an APR is good or not? Credit scores. How do credit scores work? How can I improve my credit score? What's good for my credit score or bad for my credit score? And then obviously there are lots of questions around borrowing as well, because lots of us are understandably concerned about debt. So how do we borrow in a way that's good for us, rather than a way that could necessarily lead us into problems? So I hope you'll be able to join us for that one, and I hope that you enjoyed today's session. Final thing to say about today's session is that a questionnaire will be going around via email. Would be really grateful if you could take a few minutes to fill that in. But other than that, I will open it up to questions from the floor. Anthony, Leanne, have you seen any that you are able to pick up on?
The first one that I saw was, does the credit union pay the creditors direct in regards to a consolidation loan? Yes, we can do. It's sometimes it's the agreement of getting the loan that we actually will pay your creditors off. In order to get the loan, we will pay your creditors off. Sometimes it isn't. It all depends on each individual person's criteria, but yes, we will.
Yeah, and there's a question from Sheila that says, is it better to pay off the debt first or save and with your debt? It's always better to repay your debt first, but that's not always achievable. So it's which one would work for you. If you can't afford to pay off the whole debt, and because you might have like thousands, and it may just not be possible.
I think that goes. Sorry, Nancy, go ahead.
No, I was going to say that goes down to you're paying off a loan. We encourage people to save. It's that sort of, if you can save £5 a month extra for a year while you're paying off a debt, at the end of the year you're going to have another little bit of a lump sum to pay off that debt. It's not something you could afford straight away, but yeah, so it goes down to each individual person, I would say.
No, definitely. Question here around the criteria that you make. What's the criteria that you use to decide whether someone's eligible for a consolidation loan or balance transfer? So in terms of the consolidation loans, I think the thing to say about that is that, for people with large amounts of debt, or if they've kind of fallen behind, or have got issues where perhaps already their credits starting to slip and things, a consolidation loan won't be the right solution in every circumstance. And in some cases, people have built up debts and fallen so far behind that actually taking on further borrowing just isn't going to be practical. And and sometimes when people in that sort of situation apply for consolidation loan, unfortunately we do have to say no. So I think it would be wrong to say that a consolidation loan is going to be available in all cases. I think that's why what Anthony was saying earlier about kind of coming to us early on is really important, because actually who the consolidation loans can really help situations where perhaps you're keeping up with your loan repayments, you're paying your credit card on time, you're just about managing at the moment, but you're starting to feel a little bit of pressure, and you're starting to feel like you've taken a little bit too much debt. Maybe you spent a bit more than you planned over Christmas, or there's been a family emergency or something's come up. I guess that's probably the right stage to be looking at whether a consolidation loan is the right option for you, because it's that stage where actually there are no doubts about your ability to repay, because you've been keeping up with things and you've been staying on top of your debts. But actually, what the consolidation loan can do for you is it can start to bring the temperature down a little bit. Package all your existing debts up into a kind of a smaller, more manageable monthly repayment and save you money on interest. So I think the way to think of those consolidation loans isn't as a kind of an emergency measure. It's a sort of a better safe than sorry thing to do, if that makes sense, and hopefully that's a useful answer there. Guys, any other sort of questions there that you want to pick up on?
I can only see one at the bottom from Fiona, and she's asking if the credit union would help people to get on the property ladder. I think for that kind of thing, it's more about, we don't actually offer mortgages at the moment or anything like that. And it wouldn't be a really good idea to take out a loan for a deposit for a mortgage either, because your mortgage repayment, so your mortgage provider would actually look at how much debt you have outstanding to other creditors as well. And then you'd have to repay us and the mortgage as well. So I think the best thing for that is just to save into like a longer term savings pot. Yeah,
I think that's the key thing, is that I think one of the areas where we can help you with the kind of property ladder side of things is probably, as we've talked about today, helping you to get into a situation where perhaps you're no longer kind of, if you've got debts, helping you to get on top of those debts, and then from that point getting to a stage where you're able to, the money that you would have been spending on debt repayments, you can now put into a savings pot and and start to use to either sort of grow or build up your deposit, so that to get you into a position where you might be ready to apply for a mortgage. Any other questions that we want to pick up on? I just saw one here from Terry mentioning a masterclass last week. This is actually the first week we've done this, and so apologies if there's been a miscommunication there, but hopefully the good news is that you didn't miss anything. We'll be back next month, as I say, talking about borrowing and APR, and a full recording of today's session, if you missed any part of it, will be available on our YouTube channel, and we'll be emailing that around to everybody who registered shortly. Two more very good questions. So we'll answer these and then we'll tune off. So a question from Christopher here. Do you have to work for the local authority to join the credit union? I'm trying to help my adult children to save. Leanne or Anthony, either of you want to pick that one up?
To join the credit union, you just have to live or work within our common bond area, which is Southwark, Lambeth, Westminster or Camden. Or you could work for the MOD, or yeah, but if your children lived within the area, they could join.
Yep.
But on the other side of that, you can also join other credit unions that are in your area. So if you're still looking to stick with a credit union and you don't fall into our catchment, there is credit unions pretty much for every borough in London. So you could just
And then Ahmed, you wanted to know if borrowing is dependent on savings. You don't have to have a specific amount of savings within the credit union to take out a loan with us. You can actually join and apply for a loan at the same time as well.
I think the key thing there is that when you do borrow with us, so you, as Leanne said, you can kind of join us and borrow at the same time. But what we're going to do is we're going to ask you to, at the same time as you repay your loan, we're going to ask you to perhaps maybe pay a few pounds extra on top of that, and so that's money that's going to go into your savings. So the idea is we're going to encourage you, if it's possible for you, if it's kind of reasonable for you, we're going to encourage you to do some saving at the same time as you repay the loan. And the idea there is that by the time you get to the end of repaying that loan and your loan's fully repaid, not only have you repaid your loan, but you've also built up a pot of savings, which hopefully should make it easier for you to avoid having to borrow in future, or we also offer other special savings rates where you can borrow against the savings you have with us. So it opens up kind of more options for you by building up that pot of savings as well.
So we got one there, a couple that have just come in. In one from Shanice, yeah, if you do move jobs, your repayments will still the same. We would expect most of our members to set up a direct debit or set up a form of payment with us for the same value, and we wouldn't reschedule it because you've left. The only time we'd look at rescheduling it would be that if you've gone to another job and your income is significantly less than what it was, we would then have to look at your affordability.
Great. And then I can see one from Ed and Irene, and I'm not sure whether that's from Ed or Irene or both, but they say, I have moved from Southwark but still work with the NHS and tooting. Can I keep my account?
Yeah, you can keep your account. Once you're a member, you're always a member.
Member for life.
Nice simple answer there. And then final one from Helen, and this might be one where actually we need to follow up with you via email, Helen, so feel free to email us at help@creditunion.co.uk. But Helen would like to know, can you take your savings out, and what's the procedure, please?
If you've registered for online banking with us, you can actually withdraw your savings yourself, or you can come into the branch.
Brilliant. Well, I think that's just about everything we've got time for. As I say, if we didn't get to your question, or you've got other things that pop into your head between now and the future, feel free to email us anytime at help@creditunion.co.uk. We can provide individual help with your accounts, or general questions about our products and services. So please feel free to email us on those, and we will do our best to get back to you. We aim to get back to you within 1 to 2 working days. So as I say, thanks to everybody for coming to today's session. Very much looking forward to doing this all over again next month when we look at debt. But other than that, have a great week. Thanks very much, everyone.
Bye, everyone.
Take care, everybody.